Hello, my name is Igor. I'm a financial trader. As always, well, not as always. Again, starting to use my social media, starting to create some content for you guys. So to a large extent, still figuring it out. The best way to communicate, and here is a bit of an experiment. Will I be able to get a good sound on the shore of the ocean? We'll see. Anyway, today is the 17th of May, and it was an interesting week in the markets. The rebound, sort of driven by the tariff relief situation, continues. And this particular week was supported by good news generated by Donald Trump, by his tour through Arabic states, which supposedly brought the states good deals, large amount of investment. And also, obviously, as I've said, my perception is that probably the most important thing now is that China and the states are negotiating, that they have postponed their full, at least postponed the full scale trade war. And that was the main driver behind this rally, in my opinion. I think it's also fair to mention the technical perspective right in the beginning of our conversation, because those that pressure that has driven down the stocks before was largely erased, and the Qs are sitting at about like 3.2 to 3 to 4% from the all-time high, which is supposedly good. But that could also mean that all of the positives, which is basically more or less the restoration of the status quo, like the situation that was before the uh, tariff disaster, uh, it is more or less restored. So the most important question that lingers is what's next? Will they be able to sort out the tariff situation? To what extent? Because even 10% tariff on basically the whole world is a lot, and it will cause ripple effects across the U.S. economy, which is driven by U.S. consumer. And in that regard, it is prudent to remind ourselves that the consumer, not the news, not the public relationship department of the current administration, I think the consumer, which is the main driving force of the economy of the states, is the main source of information in current circumstances. And what we see here is actually concerning, because the University of Michigan index fell to the level of 50.8 in May, and it's down again because in April it was 52 and 2, and it's almost as low as it was in July of 2022. So people are actually quite concerned with the market, with their ability to spend money, to buy goods, and to drive the economy, of course. And so is so is the situation with inflation expectations as well. So during this week, we actually got good core inflation, which came in better than expected. I mean, month on month readings 0.2 with a forecast of 0.3. Core inflation year on year is as it came in as it was expected. and inflation rate month on month is better too. But the price producer index is a bit higher. So even the raw data is mixed. But as I've said, the consumer is quite concerned, and the consumer expects the inflation to be higher later during this year. So that could be one of those irrational factors in the economy, a self-fulfilling prophecy of sorts, because people expectations turn into people actions or inaction, and that in turn influences businesses, each individual business and seller, and the economy as a whole. So this is the main data point to keep in mind, in my opinion, because as I've said, these news from the Arabic states, they are, well, let's say I tend to take them with a grain of salt, because obviously Saudi Arabia, Qatar, I hope I'm saying that right. United Arab Emirates, uh, good numbers, 600 billion, 1.2 trillion for Qatar, 200 billion for the United Arab Emirates. The first number was from Saudi Arabia. Some of these numbers, I suppose, are just previous commitments, because these states are one of the strongest and the most persistent allies of the states, not only in the region but overall. And they are also one of the largest buyers of U.S. military equipment. So that was before as well. And there are also news of their commitment to buying something from the states, with the exception of aircraft, which is good for Boeing, and military equipment, which is supposedly good for military suppliers. I don't actually get what goods you can purchase from the states, with the exception of energy exports. When it comes to military equipment, uh, maybe some oil and gas equipment, and services, B2B services, B2C services. I don't know. I'm not an accountant. I don't know how you account for purchases of US AI products, or and chips, obviously. Yes, of course. High-end chips for computation and AI. With the exception of that, you cannot expect much. Vehicles, I wouldn't say that they are very competitive now. Uh, Consumer electronics, that has been mainly outsourced to China, and I'm a bit skeptical about reshoring of that manufacturing to the states. Although everything can happen, and the states are better positioned in terms of workforce due to migration, which offsets the effects of weakening demography. Demography will be a topic to discuss in the coming weeks. But with the exception of that, I think you could uh, you could be how do you say it? You can perceive these numbers modestly, uh, good numbers, but there are still lots of things to figure out in regards to what do they actually change in the current economic relationships between the states and the United States and the Arabic states, which Donald Trump has visited so far. So in terms of macro, I think it's I think that's a complete picture for now. Personally, in my perception, chances of Federal Reserve being more uh, accommodative to the market in terms of their rate decisions, next rate decisions, this probability got a bit higher because as of now, the situation is sort of stable. Uh, Tariff situation has been stabilized for the coming 2.5 months. Time flies, you know. The deadline could approach way faster than one could expect. But as of now, for the coming weeks, it's out of the question. And there is also a good chance of at least getting no bad news, and at the very best, getting some good news. So that could help the market quite a bit, and also help Federal Reserve because if they are to ease and they are way behind uh, the Europe and the UK in that regard, if the tariff situation is removed, is solved, I think we could see them lowering the rate during the coming months, and it could be quite likely. But I don't expect them to lower the rate before the tariff situation is solved. But nevertheless, so far we didn't get bad inflation data, so that at least lowers the expectation of further rate increase or maybe even hawkish rhetoric from the Fed, which is good for the market. With that being said, it's also fair to mention that who was it? I think it was Moody's who downgraded US, and they have lost their A rating because of the debt. The debt situation is still there, and so far, as of now, we did not see any real steps to alleviate that. And if you take historical precedents into account, lowering of the rating could very well um, be the cause of a correction, maybe 5 to 10%, if the correlations are to persist. And that could coincide with testing of the 50-day moving average for the Qs, for example. And also from a technical standpoint, to track back to that a bit, it's quite feasible because the market was strong for a couple of weeks now, and some adjustment is there, uh, is to be expected, and it could very well be there. And this theme with the rating agency could be the driver of it. So overall perception of the market is actually mixed. No obvious signs to be too happy, but no bad things before our eyes at the moment. But it's completely in the middle for me right now, both in terms of price and both in terms of and in terms of fundamentals, because the indexes, as I've said, are near the highs, and so is the tariff situation to a large extent. So we're basically backtracked, and we are about to see what's happening there. If you go to the level of the individual names, their situation is like this. If you see them through my eyes, my perception of the state's economy right now is that they are holding this precious token of AI. They were the first ones to discover it. in my opinion, the AI was not invented; it was discovered because AI is nothing more and nothing less is a discovery of the fact that all the information in the universe is mathematically connected. And if you express it through the language, you wrap it into the language, you can find these connections. And when you have them, you have the model. And if you trigger them, you can explore chains of meaning, chains of these mathematical connections, which wouldn't be accessible to a human being or a collective of human beings. And we don't know about other sentience in the universe at the moment. And these lines of thought, these connections weren't accessible before, and because of the limited range of our perception, which stems from our limited computational abilities as individuals and as collectives of individuals, as collectives of humans. And also, the time factor is very important. We needed significantly more time to discover these connections of meaning. Now it's getting faster and faster thanks to the AI. And the states, to a large extent, are still leading in this domain. And it's also fair to say that the China is catching up fast. But in terms of commercialization of this, in terms of availability to the general public, in terms of turning models into actual products, in terms of supplying the hardware infrastructure for this kind of technology, the states are way ahead. And the most interesting thing in the market right now are what I call the second wave AI stocks. It's not NVIDIA because NVIDIA is large and it was the first mover in this field. And it was quite obvious that to train, now it's quite obvious, obviously. Sorry for the play of words. It was obvious that, and it became obvious that in order to train a model, you need lots of NVIDIA chips, and NVIDIA are still the best in this field. Now it's quite different. And what supposedly comes to the scene now are the companies which will productize AI, which will help its integration in all facets of business and life. And we're seeing some real names there. One of them is CoreWeave, in my opinion, and the situation as a whole resembles each market cycle, although the AI discovery is unique in my perception of it, because it's a truly revolutionary technology which will change our world a lot. But if you want to see some historical precedents, you could look into the aircraft revolution. But not only aircraft stocks grew in price. Of course they did, and it was significant and well sustained. But the ones who appreciated the most were actually the small companies, which supplied tools, equipment, parts for the aviation industry, and the companies in the AI field, which supply data, which help roll out infrastructure and solutions, which help enterprises adopt AI, which will create human-like avatars for AI and parts for them. That could be a whole different theme. Not maybe it's not so far in time for us from us. I'm mostly interested in that kind of stuff, and for me, the States will be the number one uh, market in that domain. That's quite obvious. And this is my primary point of interest there. And one of my positions as of now is Uber, because Uber is leading in the implementation of self-driving cars. In Austin, if I remember that right, most of their not like most, almost all of their taxis are operating uh, without drivers, without human drivers. Hopefully, I'm not making that up, but what I'm sure about is that they are leading in that domain. They are leading in AI uh, transportation. So that's one of the names where it's very visible. The other ones, unfortunately, I don't have that one, is Duolingo, because for them, it was hard to buy because of the overall volatility, and I'm still working on expressing my trades so I could catch ideas like that while also limiting my risk. But nevertheless, it's a clear example of the things to come. Because for them, the supposedly the supposed revolution of open source models, where you don't need that much of an infrastructure to train them, and the only thing you need is data, which is once again supposedly claimed by DeepSeek developers. For companies like Duolingo, it's a gift because it makes their business way more efficient, way less dependent on the large scale vendors of these models. They can create their own models now and fine tune them to the needs of their businesses and increase their bottom line while doing so. This is the kind of names I want to seek out in the States now and quite likely in the foreseeable future. So the hunt continues. With the exception of that, for me personally, it's hard to find any particular theme to like in the States because, as I've mentioned before, and it will be a theme of for me, there are lots of very large, too large to be efficient companies in the States, legacy companies, and like lots of mega structures these days, these companies have outgrown their usefulness. What they do now is they push achievements of tomorrow to the point of absurdity. For example, it's very it's very easy to criticize U.S. food industry now, and it has earned the name for the American diet, which is an abbreviation SAD, Standard American Diet, which is mostly harmful for any human being. It's quite easy to criticize that now, and public awareness of it grows, and that's why I'm very prone to shorting this kind of stuff. It's actually good because more healthy food equals more healthy humans, and healthy humans with healthy psyche and healthy bodies tend to produce more healthy outcomes. They tend to do healthy stuff, create healthy decisions, and make the world around us a better place. It's good. But it's also fair to mention that the industrialized food production has solved the problem of hunger. And we're not dying of hunger anymore as we did 100 years before. And it's huge. I would very much prefer to constrain myself and not to prevent myself from eating a whole pack of Doritos while watching some movie or maybe skipping McDonald's, then I would prefer to have a problem of having nothing to eat. So it's good. They did good, but now it's time to go. And there are lots of time to go or time to transform. And I'm quite skeptical of their ability to transform because, as I've said, they are too large to be lean, too large to be flexible. But we'll see. Some of them could surprise us. Same is with the military-industrial complex because once again, Americans produce lots of military equipment, and it's very high tech. It's very efficient, and it's probably the most efficient on the battlefield. But is it the most efficient in terms of price value, so to speak? That's an open question. Hopefully, we don't have a full-scale war between the states and the country which could really rival them. That one could be China. And we don't see how it really works. But as of now, I would say that flexibility, that mobility in the military industrial complex of the state is largely lost. And that could be illustrated by the F-35 program, which is famous for its delays and ballooning of expenses. There are lots of anecdotal evidence of that, like absurdly pricey spare parts, absolutely basic spare parts, and so on and so forth. And what else? There are lots of industries to pick on, actually. Health overall, once again, I think health industry in the States, when you have the resources, is one of the best, is not the best on the globe. But is it the best when it comes to value you get for your money? And it's the technology. When you go outside of the technology and you get into infrastructure and you get the health insurance industry, it's bad. Uh, Chief executive officers don't get shot if they do good business. I know maybe it's rude, but it's true. And you don't have to be an expert in American culture to say that lots of Americans are not happy with their health insurance, and it's very diplomatically said. Quite a lot of people in the states are angry with their health insurance expenses and the value they get for these expenses. So that's another example. And you could find examples like that in lots of industries in the States, and even in the Magnificent Seven. So, and as we see it in the MDY and the Russell, I don't remember the ticker for it right away, the Small Business Index in the States. Unfortunately, they are not here to save us because small businesses are still suffering from inflation, and they are the first ones to be hit with the tariff situation too. But they could also they could also benefit hugely from the AI thing. So as you see, when you start digging, the situation overall is neutral and maybe with a slight bearish inclination at the moment. As I've said, the states themselves as a market are unrivaled in terms of liquidity, in terms of business environment, which is supportive of innovation. But there are lots of challenges there as well. And will they be addressed? Will the US business bureaucracy, and not only business bureaucracy, be able to make itself smaller, more efficient, uh, sort of restore the spirit of youth, so to speak. I don't, with a lack of better words for this. We'll see. The fact that the United Health is under criminal investigation is actually quite bullish, not for the company, obviously, but for the sector, and maybe not only for the health insurance sector. So we'll see. There are lots of things to track in the coming months, and situation could be drastically different months ahead. So that's why I'm mostly neutral. I'm neutral, so that's why I like to short uh, companies from the sectors I've mentioned when opportunities arise. And if my perception of the situation is correct, I mean, with the situation with benefits from the uh, Arabic tour of Donald Trump, if it is more of an informational situation and less of a fundamental game changer, which it likely is, their relief rally from the second half of the previous week could be a good shorting opportunity as well, at least in my point of view. So defense, healthcare, and other legacy business, including some companies from Max 7. This is my bearish scope of view, and anything related to further enhancements in AI and the commoditization of AI is very, very interesting. There is one development to mention there also, and it could be quite significant, but we didn't see that in the market yet. Uh, One research paper was published, and it says that to train new models, you don't need data sets anymore, or you don't need data sets as much as you did before. And that some models are able to actually generate their own data sets, which they will use to train on and to play with themselves the task that they are about to be given, to the point when they expect, then they become experts in it. Sort of like the famous Google AlphaGo was the name AI, which is leading in the complicated Chinese game, which is called Go now. It did not study on games of other players, be it human players or AI. It was playing with itself and learning in the process. So that's the situation which is about to unfold quite likely in the space of AI in the coming weeks and months. So some companies, uh, especially the ones which position themselves as providers of data sets, as providers of learning for these models, could face some pressure in that domain. So that basically means that this space is so young, and we could expect more DeepSeek moments to come. And some of them will come from China, and some of them will come from outside of China and from the states themselves. So this is a volatile environment, and risk management is key there as well. And I think it's safe to conclude market thoughts and economic thoughts at the moment. And what I wanted to end up with is a bit of a general ramble. Maybe I will create another format for that. But as you've seen, I decided to go back to social media, so that's why I was posting. I posted the first video. That's why I'm doing this one. I was also posting some shorts regarding some names. I was shorting during the previous week, and I didn't use much of it for several months or several quarters. I was casually scrolling through something and quickly turning it off. But I should say I derive my stock market news from scanning headlines of major news outlets in the field, and all the rest I just get from the names themselves. So as a result of this, I became more immersed in what's happening in social media. And guys, I should say that it was a horrible experience, and it's so difficult to keep your focus and sanity while using these platforms, all of them, Instagram, X, even YouTube, which is worse on the phone. All of them are competing with each other with not just grabbing. I think grabbing is not the relevant term. It's hijacking your brain, your attention, and attention is the most important thing nowadays in the informational economy, in the age of information. It's not grabbing. It's really it's like robbing you of your attention. And So okay, they get it. It's easy to scroll. It's easy to see uh, flashy um, pictures which preclude videos or maybe text punchlines when we use X Twitter. I mean, but at the same moment, once they get your attention, they start attacking you with ads. And I had a paid subscription for X, but it turns out that it's not enough. I have to pay more to see less ads, and to pay way more to see no ads at all. And these ads, they are designed uh, to be even more aggressive than posts which are created by content creators. So it goes further down the line. The fragmentation of your ability to focus, and they also induce emotions immediately, like all kinds of primal emotions of mammalian or even states contributed to our lizard brain, instinctual states. So it gets way worse. And you don't have to be a neurosurgeon or neurobiologist to understand that continuous exposure to this is very bad for human ability to think. Some people say that we are not shortening our attention span, that we are just adapting to the reality of the current moment, that we are just becoming, that our brains are not becoming less, they're just becoming more picky. And if we find something really interesting, then we're able to concentrate and to spend time on it. But I think that what I saw now is not it's not conducive to that. Some people may adopt, but I think that what I saw during the previous week is just it's too bad. You know, it's a weapon in action. By saying that, I don't mean that somebody is attacking like some hostile force, attacking the human populations all around the world, because social media is more or less all the same around the world in different cultural and political systems, in different ideologies, and even religious. They are more or less the same. I think that it is sort of a. I'm pretty sure that there is a fancy term for that, but it's just progress backfiring on us. It's just people want organizations want and people want to make money, so that's why are competing with each other, and by competing they create more and more aggressive forms of content and ads, which harm human cognition. And what did I want to mention as well? So yeah, attention grab, attention span shortening content, emotional roller coaster, which is conducive to being more suggestible. And what's even more interesting, lots of this content, I mean ads themselves, is bad. It's it's scam tokens. It's cheap, really cheap and bad quality products from China. They do lots of good high tech products, but they also ship lots of crap. And it's bad products, bad services being, or out, or even outright scammy uh, financial services being marketed very aggressively, being marketed with weapons grade attention attention grabbing tech. But I think I'm failing to produce a good metaphor for that. But still, there are lots of good and interesting people on social media, and to get to them, you got to use them. But to do so efficiently, you gotta do that in a hazmat suit, so to speak, with the protective lenses before your eyes and your ears. That's the main take, and you gotta perceive that each moment when you go there and you try to communicate with others, you gotta be able to protect yourself from these hostile algorithms, which not only try to force you into becoming an emotional, short fused uh, being with an ability to focus, but they are trying to isolate yourself in echo chambers, uh, in um, in communities of like-minded people, which is good. It's good to be in a community of like-minded people, but the overall dynamic, the emotional backdrop of all of this is not good. It separates people, not unites them. I know maybe I'm sounding naive, and I think it's safe to assume that I'm sounding naive and like a person who has been outside of it for quite some time. But that is these are my conclusions, and I'm here to stay. I'll continue, obviously, for as long as I can, because these platforms are good for sharing thoughts. And one of our purposes as humans is to share our thoughts, to share information, and to create new, useful, and exciting information. That's how I see it. And this is my personal discovery uh, when it comes to the meaning of life. But to finish with something investment related, I think it's safe to assume that social media stocks are non-existent. You cannot find an expression for your trade if you want to be. They are so gone that can't even short them. So most of social media companies are either private or they are trying to pivot in other domains like Meta, ex Facebook. Uh, but I probably should look into Snapchat though. One name came to my mind when I mentioned that. So it's a complete cycle. We're witnessing a complete cycle. New revolutionary technology, lots of innovation, rapid expansion, commoditization, reaching its usefulness, high point, and now it's sort of on the decline. But it's a commodity, and you can still derive lots of usefulness from a commodity. So that's it for now. See you.